Hello and welcome back to my YouTube channel. Today we are going to talk about emotional investing and how our emotions impact our investing behavior and how can we put filters and framework in place so we can ride our emotions and at the same time we can have money whenever we need. So this is a 2-minute framework to stop mood-based investing. This is what I am bringing it to you. Let's me share all the interesting insight about this. Now be honest. How many times you've bought an investment because you felt FOMO, fear, because you were super excited, or because that, bro, this is a guaranteed investment, or because this was there as part of some trending reels. And then later you said, oh, I had a long-term view. No, you had a short-term mood. The in because this investing is not based on the fundamental principle of investing. This is regarded as a mood-based investing. And this leads to a situation where confusion is solution का कुछ पता नहीं. So today I am bringing to you a solution for emotional investing filter. Now, let me tell you why emotions ruin investing. Because let's normalize it. Investing is emotional for everyone because money is tied to security, status, and survival. And market triggers would lead to greed when price increases, fear when price fall, ego when you are right, shame when you are wrong. So you feel emotional because you are human. But if you invest emotionally, you will pay market tuition fee first. Market tuition fee are fees where you pay and still you don't get any certificate because these are the expensive investment that you made to learn and understand. Now, what is the promise of this emotional investing framework or filter that I'm presenting it to you? And how does it help you? This filter is not to make you perfect. It is to stop the worst mistake, which is buying at peak, panic selling, over trading, is chasing trend, investing money when you need soon. It helps you to turn emotions into a process. And when you stop all of this worst mistake, you are no longer making an investing decision driven by your emotion. So here is an emotional investing framework that I bring to you. That framework is called pause. Pause before you invest. Now let's understand each of this parameter of pause. P is for purpose, A for amount and allocation, U for understanding, S for stress, and E for exit and execution. So let's understand each of these acronyms in detail. P for purpose is why am I investing? What is this money for? Do I need this money for my kids' education? Do I need this money for my vacation? When will I need this money? Is this a goal investment or a boredom trade? So, if you can't answer this, it's probably an emotion because the simple rule is money needed in less than 2 years should not be in highly volatile assets. So, first, you identify the purpose why you are making this investment. What is this money for? When are you going to need this money? And is this a goal-based invest? If you need money for wedding next year, don't invest it like you're funding SpaceX. Money needed next year to be put in an emergency or a liquid fund. A is amount and allocation. Ask yourself, how much do I already have in this category? The categories would be equity, debt, real estate, gold. And even in equity, you can further diversify into core and explore. So for each of this category, ask yourself this question: how much do I already have in this category? Will this make me over concentrated if I continue buying? in this category, whether this is my core investment or an explore money that I am putting in. So guidelines is for core, have 80 to 90% of your portfolio into core category. It is boring, diversified, long-term investment. And explore could be 10 to 20% where you want to experiment with trends and limits. That's up to you. So if your investment is large enough to ruin your sleep, it's too late. So it's time for you to take charge of your situation and decide on your amount and allocation towards each of these categories. So ensure that the amount is not big enough to ruin yourself. U is for understanding. Do I understand what am I buying? Can I explain this investment in a minute? Is the question that you have to ask. How does this make money? What can go wrong? If you can't explain it, don't buy it. Because buying things, what you don't understand, is like taking medicine without reading the label and then being shocked by the side effects of that medicine. So ensure that when you're making a investing decision, you thoroughly understand it and you are able to explain why are you making this decision. S is for stress test. Can I handle volatility? If you ask yourself, if my stock portfolio falls 20 to 30%, what will I do? Will I panic sell? Do I have emergency funds so I won't be forced to sell? If you can't handle the fall, reduce the size. Ensure that you have adequate capability to handle volatility that comes with stock market. That's the S. And this is the most important thing because this is where most people lie to themselves. They say I'm a long-term investor and those people are not many times long-term investor are short-term investor forced to become long-term because they could not exit the market at right time. So understanding market volatility and the stress that comes with that volatility is very important. E is for exit and execution rules. This step is the difference between gambling and investing. Set rules before you buy. When will I review? Will I review monthly or weekly? Definitely not daily. What will make me sell this stock? Is there a thesis break or is there a overall market fall? Definitely not the price and more. Will I add more and under what conditions? What's my maximum allocation to this portfolio? So, no more than one major portfolio change per month. This is the rule that you have to build. Ensure that before you make any buying decision, you review your portfolio. You ask yourself, when will I review? Whether it's going to be monthly or a weekly. What would make me sell? What are the indicators of sell triggers that I've already decided before I make a buying decision? Will I add more and when will I add more? What's the maximum allocation that I can allow? So your portfolio is not a WhatsApp group where you add and remove people daily. Your portfolio should not change more than one major decision per month. Now, use this filter in how to use this impulse filter in a real life situation. And this is what I want to share it with you. So, first is when you get hot stock tip. So, the tip arrives like guaranteed multi-bagger buy and you will make lot of money. So, when you get such messages, pause, ask, what's the purpose? What's the goal? It cannot be an emotion. Amount. Will it become too big too soon? Understand. Do I know this business? Yes or no? If you do not know, do not invest. Skip or keep it in explore, which is in a small category. No blind guaranteed bets and no investing based on tips. Example 2, stock market crash and a panic. Market fall, fear rises. Again, pause. What's the long term goal? Whether I'm investing for long term then whether I've invested for long term, then definitely I don't need to panic in this market and I don't need to sell. Stress test, can I handle? Can I reduce checking my portfolio every few minutes? Execution, continue SIP, review monthly. Don't panic sell, follow the rules. You don't need to remove emotion. You just need to stop emotion from driving action. So pause. Pause before making any investing decision. Because this is the hard truth. And that's why emotional investing filter, it just turns feeling into a checklist. And this helps you to stop confusion around your portfolio and make decision based on your investing ability and your investing analysis. I would like to know from you, which emotion did you hit hardest? Whether it was FOMO, whether it was fear, greed, impatience, regret, which of this emotion has forced you to make buying or selling decision? Let me know in comment section below. If you know any of your friends who are struggling with emotion when it comes to buying and selling stock in market, share this video with them. And what are your key learnings from this video? Let me know in comment section below. I would love to hear your learning, and also I would love to hear from you how can I help you to grow in your investing journey. Thank you so much for watching this video.